Good evening, friends. Welcome to our YouTube channel, Evergreen Stock Market. Friends, if you are newcomer to our channel, please see our previous videos at least once. If you feel those are useful and add on to your knowledge, please subscribe to our channel. If you want to see this video in Telugu, we added that link in pinned comment. Please see that. Friends, we discussed about various investments in our previous videos. You can find those videos by clicking on the I button on the top right corner of this video. Today, we'll discuss about exchange traded funds or ETFs, its types, difference between mutual funds and ETFs, and its structure. Also, at the end of this video, I'll discuss a very interesting topic on how to get interest for ideal money in trading account. So, keep watching till the end. Exchange traded funds or ETFs. They're same like mutual funds but can be traded like stocks. Usually mutual funds will invest in stocks, indexes, bonds, gold, etc. Right? Like that, ETFs also invest in the same, but they can be brought in stock exchanges like NSE and BSE like a stock. Let's see the structure of ETFs. Like any other mutual fund schemes, ETFs will also be designed by AMCs, asset management companies. They will set the investment objective and they will create units of ETFs. Authorized investors like large investors, institutions, etc., will purchase those ETF units from the primary market and they will sell those units in the secondary market. From there onwards, like any other stock, ETFs will also be traded in the secondary market. Now, let's see the difference between mutual funds and ETFs. We can buy mutual funds only at the end of trading day as NAV, net asset value. But ETFs can be bought anytime during the trading hours like stocks and price will vary throughout the day. Mutual funds will have higher fees and higher expense ratio, but ETFs will only have brokerage cost like stocks. For mutual funds, we cannot place limit or stop loss orders like I want to buy at this particular price or sell at this price. But for ETFs, we can place orders like limit order, stop loss order, bracket order, and cover order. Even margins are applicable for ETFs. Investors have to pay exit load if they want to exit mutual funds before stipulated period. But ETFs can be bought and sold multiple times a day with just brokerage charges. Minimum investment amount is required for mutual funds, but for ETFs, minimum amount required is the cost of one ETF. Automatic investments is possible with mutual funds. For example, if you choose SIP, amount will be deducted from your account automatically every month, but it is not possible for ETFs. Mutual funds have lower liquidity compared to ETFs. ETFs have higher liquidity since it is not connected to daily trading volumes. ETF liquidity is related to liquidity of stocks included in that index. Mutual funds are actively managed by professionals. They will pick assets in such a way that it beats the index and achieves higher performance. But for ETFs, it tries to match the price movement and returns similar to the index. Types of ETFs. ETFs are mainly classified into four types: equity, gold, bond, and old indices. Now let's see all these in NSE website. This is the NSE website homepage. Go to products, exchange traded funds, and current markets. If you click on equity, a page will appear. As the name suggests, these are the ETFs invested in equity. This is the AMC scheme name, symbol which we need to use for trading, and underlying like Nifty 50, Nifty 100, Nifty Bank, Mid Cap, Next 50, PSU Bank, Sensex, like that. And This is the launch date of that particular scheme. If you click on gold, these are the gold ETFs. Axis Mutual Fund, Birla Sun Life, Canara, HDFC, ICICI, like that. If you see the old indices, other than Indian indices, there are two other indices available in NSE. Nasdaq 100 from USA, Hong Seng from Hong Kong. That means we can invest in other country indices as well. Last one is debt ETF. You can find all debt ETF details here. Now let's see the detailed view of these ETFs. In the same NSE website, if you go to live market, you'll find an option like exchange traded funds. If you click that, you'll get all the ETFs here. This is the symbol like ICICI 50, ICICI Next 50, which is and the underlying asset like Nifty Bank, Nifty 100, Nifty Midcap, Nifty Next 50, Nifty 50, like that. Their opening price, high, low, previous closure, last traded price, percentage change, volume. You can find all these details here. If you see the volume, the ETFs have high liquidity, which we discussed, right? Goldbees is having high liquidity. If you want to invest in gold, you can invest in Goldbees. And Nifty Bees, which is related to Nifty 50. Bank Bees or Kotak Bank ETF related to Nifty Bank. This you can invest in these particular ETFs for long term. If you want to invest in indices, you can either invest in index mutual funds or these ETFs for long term. If you see this pic, Nifty Bees moves exactly similar to Nifty 50. If you want to invest in Nifty 50 index for long term, you can invest in Nifty Bees, as both are identical. Similarly, if you want to invest in Bank Nifty, you can invest in Bank Bees. Now let's see the highlight of our video. How to earn interest for ideal amount in trading account. Assume a scenario. You closed your trade today and you have 10,000 cash in your trading account. You didn't see any nice investment opportunities for the next 2 days. So your cash will be idle in your trading account, right? Even if you withdraw that amount today, you can't keep that amount in FDs as you require that amount after 2 days for investment. So ultimate choice will be savings account, which will hardly give 3% interest rates, right? But if you have a chance to invest the 10,000 in one ETF for minimum of 1 day and can get returns more than savings account, which is between 5 to 7% per annum, that would be great, right? That ETF is nothing but liquid ETFs. There are 3 liquid ETFs available currently, and they all work in the same way. Liquid Bees, which is issued and administered by Reliance Mutual Fund. Liquid ETF, issued and administered by DSP Mutual Fund. ICICI LQ, issued and administered by ICICI Mutual Fund. In this video, we'll talk about Liquid Bees as it is having high liquidity. If you see the volume in this peak, you can understand that it has high liquidity. The face value of Liquid Bees is 1000 and the market value is also remains at 1000 levels. You can see the open, high, low, close, all are around 1000. So your capital will be safe. You can purchase this for 1000 rupees and can sold this for 1000 rupees. Dividends are calculated on a daily basis and reinvested at the end of the month in the form of additional Liquid Bees units. Assume you have 1 lakh in your trading account. You brought 100 Liquid Bees, each cost 1000 rupees and the interest rate is 6%. If you keep that money in your trading account for 15 days, your interest amount would be 250 rupees for 15 days. It won't get credited to your account. It will wait for the interest to become 1000 rupees, and then it will credit one Liquidbase unit to your Demat account. You can sell that unit if you want the amount. Maybe you're thinking why you need to wait till the amount becomes 1000 rupees, right? But even in your savings account, you will get the interest amount only at the end of quarter, right? That means 3 months. At least here with Liquidbase, you will get higher interest rates than savings accounts, almost double. So please check out this option. That's it for today, guys. Thank you for watching our video. If you like this video, please like, share, comment and subscribe to our channel for more interesting videos. See you guys in the next video. Until then, stay home, stay safe.